I believe the market has gotten way, way deeper. If I look at the last 10, 20 years, the options and universe of wise exit has really expanded.
Is international capital here to stay?
I think so long as the region exhibits the fundamentals that it has today, it should be. Our capital currently, for the last almost decade, is focused on essential business services.
What deems a service essential?
Are they outsourcing a non-core function? Yes. However, is it mission critical for them to have this? Yes, because they cannot be in the insurance space without having the ability to service their claims.
Yeah.
That disconnect will be very detrimental to their business in a very short amount of time.
You would buy a company that doesn't fit your management aspiration.
For us, we see management as partners. Especially in our region, we can't have a hire and fire culture that you might see in deeper labor markets. For us, it's not enough just to see these criteria financial. We really test for scalability and really get into depth, because not every company is fit to be a private equity platform company.
Hello and welcome to a new episode of our Capitus podcast series, Our Capita Perspectives. My name is Ahmed Salem, Managing Director in the Investors Relationship Management Team at Our Capita, and I'll moderate today's episode. Joining us today is Waleed Abdulaziz, Director of MENA Private Equity at Our Capita. Good to have you with us, Waleed.
It's great to be here, Ahmed. Thank you for having me.
Waleed, over the past 2 years, we've seen significant private equity activity in the region. Is this here to stay, or is it a cyclical bubble?
Oh, great question, Ahmed. I think definitely the last 2 years has seen a significant increase in private equity activity. Part of that could be due to just where we are in the cycle here in the region, which is, alhamdulillah, we're having a great time. However, I think a lot of this owes to fundamental or structural changes in the private equity investment opportunity here. You have to remember that our region is fairly young when it comes to our economic base. We're a region that sort of started industrializing in the 70s.
Yeah.
So our economic history spans 50, 60 years. So every 10 years is a significant amount of time. And if you look at, for instance, where we focus at Our Capita, which is what we call middle market private equity, we focus on companies that earn more than $10 million of EBITDA. And if I just compare, the available pool of companies to invest in 10 years ago that earn more than $10 million EBITDA to today, there has been a significant increase in the number of investment opportunities. So that naturally would attract more investors and capital to this asset class. Now, when I couple that with a few other significant changes in the region, being, first of all, it's very clear that the governments are embarking on, I think, very credible privatization initiatives. If you just chart out the contribution of the private sector to the GDP in the region, you'll see that definitely that has grown in significant terms. So that, again,
in a maturing economy, it's natural to see regulations changing.
Yeah.
Be it labor or taxes. And how does that affect your business?
Yeah, so 100% we need to be more conscious about the regulatory environment when we're investing in any market and any sector. However, if you look at where we focus, which is business services space, and a lot of that is driven by companies outsourcing critical.
What I mean is it a hurdle or is it an opportunity?
I think it generates a lot of tailwinds, given our investment strategy, which is, again, when it comes to just what happens is you see more corporates, because of regulation, needing to outsource certain things.
Yeah.
Right? That creates a tailwind. Because instead of them perhaps doing everything in-house, the regulatory, I think, burden that's created by, more regulation naturally forces you to think, how could I be more efficient? Or how can I de-risk, this aspect of my operations? And generally, that creates a lot of tailwinds for the type of companies we like to invest in within business services.
Yeah. So going back a bit, I understand from you that a decade ago, the industry in the GCC was maybe rudimentary, if I were to say. And what has led the change here?
Look, it definitely was perhaps less mature than where we are today.
Yeah.
But like I said, I think our economies have expanded a lot.
Yeah.
I think in terms of just the availability of capital, if you just look at the availability of debt financing, because I've lived through the last, I've seen this with my own eyes, right? That has matured a lot. Banks are now more willing to finance private equity deals than ever before, right? And that has to do with the maturity of the sector. So naturally, that creates opportunities for us to leverage our investments, which means better returns, being able to pay sellers better valuations than in the case where there's no leverage. So again, that really helps create more activity in the space. And then I think the other thing that's happening is, at the end of the day with private equity, we're as good as the opportunities we can invest in. And here in this region, obviously, a lot of those good companies, those good investment opportunities sit with family businesses.
Waleed, we've often heard our capita talk about business services or essential business services. What is business services? And how do you define business services?
I think a distinction is our capita currently, for the last almost decade, is focused on essential business services. Now, business services, if I take a very big step back, could be defined as any business that serves other businesses, so B2B, potentially even B2G is captured under that criteria, and provides services to that third party.
What deems a service essential?
Now, that is the magic of our criteria. Right? That's the most important distinguishing feature of our strategy. For us, I think we look for things that, and this is sort of the trend that the macro trend that we're trying to sort of invest in. What you see is more and more corporates are outsourcing non-core operations. I mean, let's use a very simple example. If you look at facilities management, so just how any facility, any building is taken care of. You need to clean the building, you need to maintain its security, you need to maintain different infrastructure.
Janitorial services.
Et cetera, et cetera. If you just go to the US market and you look 30 years ago, you'll find a big part of that was insourced. So property developers, property owners would hire their own teams. If you look at it today, the vast majority of the market is outsourced. And so the trend that we're seeing is businesses, for multiple reasons, are outsourcing a lot of their non-core functions. Okay? And that could be done because of regulatory reasons, for commercial reasons, for better customer services, potentially legal reasons, or all of the above. And so that creates an opportunities for those businesses that serve those outsourcing needs of other corporates. Now, when it comes to essential business services, what we're looking at is the type of services that, although it's non-core for the outsourcing party, it's still very defensive in terms of how they demand that service. So whether they're doing good financially or they're not doing really good, they cannot continue to operate within that segment without those services being provided. If we come back to facilities management, as a property developer, whether you are leasing the full building or you're leasing half of the units in the building, you still need to maintain the building at a certain standard.
Correct.
Especially as more regulations come into a sector, right? You, unfortunately, irrespective of how you're doing financially, will need to operate at a certain minimum standard, right? And that could be because the regulation says it, or because customers demand it, or because if you are to perhaps preserve this asset and the longevity of the asset, you need to provide that service. So these are the theses we go after, and this can cut across a lot of sectors, whether it's healthcare, education,
what are the subsectors?
Let's use some of the examples we had in our portfolio, right? Of whether we've exited or continue to have. For instance, here in the region, we had a company called NOS,
yes,
which is what's termed a healthcare TPA. And now, if you look at that space,
TPA as in third party administrator.
So it's basically part of the healthcare insurance ecosystem.
Yeah.
Now, healthcare insurance is provided by insurance companies, right?
Okay.
They underwrite the risk,
Correct.
Right? They say, fine, I go into an insurance company, I say, I'd like to have healthcare insurance. They look at me, they put some data in, and they say, fine, here you go, that's your insurance card.
Yeah.
However, if you think about it, the journey doesn't stop here.
Okay.
As a customer, then, if God forbid I get sick or something happens, I need to use that card. So there's a whole set of operations around how do I get to use the card? Which hospital do I get to see? Is the claim I'm making, or perhaps is the hospital's claim from the insurance company valid or not valid? Do they accept that? How does the hospital get paid after I go and see a doctor?
Okay.
Right? So all of that, the insurance company could do it in-house.
Or outsource to a TPA.
Now, the trend is they outsource it to a TPA. Why do they do that? Because TPAs can just do it more efficiently. And when you look at the insurance sector,
it allows the insurance company to focus on its business.
Core. So the insurance company can focus on its core, underwriting risks. When it comes to servicing the claims generated by those risks, it's much more economical for an insurance company to outsource it to one specialized party, right, that can aggregate the demand from different insurance companies and do it in a much more efficient manner. Now, are they outsourcing a non-core function? Yes. However, is it mission critical for them to have this? Yes, because they cannot be in the insurance space without having the ability to service their claims.
Yeah.
That disconnect will be very detrimental to their business in a very short amount of time. So no matter how good they're doing or how bad they're doing, right? How good the risk or how bad the risk, they outsource to TPAs. And that's sort of the type of companies we like to look for. These are companies that typically serve the OPEX needs of insurance companies.
Waleed, do all essential business services exhibit high cash flows, low capex, and are asset light?
A great question. So I don't think indiscriminately we can make that statement. So even when it comes to the way we screen opportunities in this space, we really have to focus on scalable opportunities. That's why it's only after a certain size, and let's say with certain business models, even if you look at 4 competing firms, it's not necessarily that all of them will exhibit these features.
Size is EBITDA or a percentage of the market?
I think it has to be a lot of things together. So I think the companies we look to invest in perfect 3 aspects, and this is what we test when we diligence them. People, process, technology. At first level, they need to have the right people. They need to have independent, professional management teams that can run the business, right? And that can always stay ahead of the curve when it comes to their market. Number 2, they need to have perfected the right processes, right? That generate, efficient margins, but also maintain good customer service. And there needs to be some level of resilience in those processes. And finally, technology as a backbone for scalability. For us, it's not enough just to see these criteria financially. We really test for scalability and really get into depth, because not every company is fit to be a private equity platform company. It's only when you have these 3 factors really perfected that I think those investments become fit for growth or fit for our investment thesis.
How critical is management there?
The management of the company. For us, we have a very, very strict
You would
policy.
buy a company that doesn't fit your management aspirations.
For us, we see management as partners. Especially in our region, we can't have a hire and fire culture that you might see in deeper labor markets. You have to remember, our region still imports a lot of the talent it brings in. Mm-hmm. And to be honest, finding the right people is not easy. It's something you should be very careful about. And it's a time-consuming process.
Because they have to be good and fit for growth.
Exactly. Especially that we focus on the number 1 to 4 players in markets. So,
yes.
So we need a certain caliber of management for any segment. So we would not invest in a company, no matter how good the valuation is or even the prospects, if we don't think we have the right management team. So we actually view management as partners in growth.
So post-acquiring a company, you're focused on growth, not re-institutionalizing the business or anything else?
We would like to have most of our focus on driving the value creation plan as opposed to having to spend a lot of time just re-institutionalizing the company and building it. Now, in a lot of situations, we would say, we need to supplement the team.
Yeah.
Or maybe add added layers of governance, whatever. That's fine.
Yeah.
But it can be that, if we test the level of, let's say, management and institutionalization of a company, it can be that 90% of that does not exist. So even if you give us the company at a steal valuation, we would not go there because we think we're subjecting our investors to too much risk, especially in this part of the world.
Yeah. So a good company with a good valuation.
Exactly.
With good management that is fit for growth.
What we look for is to take something from good to better.
Okay.
Right? Not sort of start from scratch, right? Or some sort of have a turnaround situation. We look for
good to better.
Or good to great, let's say.
Good to great.
Yeah. That's what we're looking for. And we sit on the board and try to drive things more strategically, whether it comes to some of the, we just have oversight and steer with management over some of the headline strategic initiatives for the next, for the next 3 to 5 years. Or we look at things like capital structure and dividend policy, and we play a big role with that because that goes to how we, return capital to our investors, or things like M&A and other sort of inorganic strategic initiatives like partnerships. So that's how we try to create value. But in terms of the day-to-day operations, when it comes to our Capita's investment philosophy, we leave that in the hands of management. We just make sure that there is the right governance and the right people in place to sort of manage the company. Otherwise, we tend to sort of, not invest in companies that don't meet that criteria.
Let's tap into exits. It's easier for everyone to buy a company. How liquid is the exit market?
Yeah, great question. So look, I believe the market has gotten way, way deeper. If I look at the last 10, 20 years, the options and universe of buyers for exit has really expanded in our region. And I think that's part of why I believe it's such a great time and such an inflection point. So for us, when we look at exit options, and before we close any private equity deal, we naturally have to think that as a private equity investor, there is a shelf life to our involvement in the company. That could be 3, that could be 5, that could be 7 years, whatever that is. But ultimately, we need to have the asset that we can exit to someone else, right? This needs to be an attractive investment opportunity for the next set of buyers. And to be honest, I think the depth of the exit market in the region has increased significantly over the past decade.
And this is from strategic buyers?
A lot of different things.
Or are these
across the board
IPO companies?
No matter what segment of the buyer universe I take, it has expanded.
Okay.
If I start with the IPO market, it has gotten way deeper. The amount of companies and the trading on the IPO exchanges in the region has grown, both Tadawul and ADX in Abu Dhabi. The other thing is, as you have more companies on the IPO market who have public market currencies, which typically means they trade at higher valuations than the private market, that means you have a new set of buyers. These public market buyers can access public market fundraising or debt markets or other options, issue shares to buy private companies. And that creates a deeper segment for us when it comes to exit opportunities in terms of having corporates and strategics. And then the third leg is when it comes to financial investors. Both the regional sovereign wealth funds and other government-related entities and also family offices are allocating more capital to regional private equity, which means either through other private equity managers or through those principals themselves, they're also acting as potential buyers.
Let me come back to you on IPOs and strategic sales. Tell us more about international capital that has been recently entering the market.
Yeah, there has been a notable increase,
especially the past 2 years.
In the past 2 years, I think some of that is obviously driven by because a lot of our the sovereign wealth funds in the region are major investors with a lot of these international capital players, at least the top tier ones. So obviously they are to some level following the focus of their clients, because post-COVID we have seen greater focus by a lot of the government-related entities and sovereigns on the region. But I think a lot of the other aspects is they're seeing the opportunity here, and that's also what's driving their interest.
Is international capital here to stay?
I think so long as the region exhibits the fundamentals that it has today, it should be, right? Because a lot of this international capital covers different parts of the world, whether developed, developing, or frontier. And so long as they see opportunities for them to come in, buy the right asset, have the right value creation plan for it, and finally harvest value, right, through an exit, they will be coming. They definitely would be interested.
You sold a company to a Fortune 100 company back in, I recall, 2019.
2020, actually.
2020. Yeah. Is that your more favorable exit route?
It depends on the situation. To be honest, for instance, in that case, I mean, the company...
So that's an example of international
That's an example, right? That was a publicly listed company in the New York Stock Exchange, very large company. We acquired a company, we built it into a regional platform and a very scalable platform. And they attributed a lot of value to that because they wanted to use our asset as a way for them to expand not only in the wider Gulf, but even into Africa and other emerging markets. And then they really like the business model that we've developed here.
So they wanted a plug and play in the region, but also growable too.
Exactly. So obviously that motivated them to pay a very attractive valuation. But I think that's part of the thesis we have here, right? Because where we sit in the world as a region, we can be a great corridor to a lot of I think important markets in Asia, India, Africa, even into Europe. And again, given the environment here, the tax environment, the regulatory regime, which is quite business friendly, I think that you'll see more international capital being interested to, I think, plug in companies from the region, right, into their existing operations, or perhaps even bring some aspect of their operation here. And that creates opportunities for us, because if we're investing in the right companies, we can prove to these buyers that these are scalable platforms that fit with their strategies. Obviously they can assign a lot of value to that, and for us that means we can achieve strong returns.
I enjoyed the conversation, Waleed. Thank you for your time and insights today.
Thank you for having me, Ahmed.
They look like exciting times for GCC Private Equity.
Bismillah.